Welcome back. Handing down your wealth is not just as simple as writing a check or naming a beneficiary. There are crucial details you want to consider to preserve your financial legacy.
And our next guest is here with tips on how to maximize your giving without excessive inheritance tax. Please welcome to the show, tax lawyer Samantha Prasad. Welcome.
Good to have you here.
Melissa.
An important conversation.
It's true. We know the saying, right? The only two things that are certain in life is death and taxes.
Yeah.
So what happens to your assets and your liabilities or your debt after you pass away? And are they taxed, or how are they taxed?
Yeah, so when you die, the government treats it as if you've sold all of your assets the day before you die. It's like, you know, like a liquidity event. And to the extent that any of your assets have grown in value, that difference is going to be subject to tax. So it's actually income in your year of death. And your estate is going to have to file a tax return and pay tax on that value. So that difference is actually treated, that income is called a capital gain. And the tax rates kind of vary depending on what province you live in. So in Ontario, for example, the top tax rate is like 53.53%. I know it's a lot.
Oh my.
Alberta's 48%. But if there's a bit of a silver lining when we're talking about death and taxes, at least only half of that amount, half of your gain, is subject to that tax. But there's going to be a tax bill that has to be paid, unfortunately.
So I just wanted to be clear, when you die, your family has to file your final tax return.
So good question. Your executors have to file your tax return. So your estate is the taxpayer. So you have to decide who are your executors, and they will take care of that.
Yeah, that's a good question, because I think most people didn't know that.
Yeah.
All right, so what is an estate? Can you break that down for us?
Yeah, so an estate is basically the collective sum of all of your assets and your liabilities at the time of your death that you own. That's your estate. And who manages it? It's the executors that we were just talking about. So normally in your will, you would designate who your executors are, and they're going to have that responsibility. If you don't have a will, then you haven't designated anybody. So normally your family then would probably take that responsibility. They have to go to court to get appointed as your executors. Yeah.
Oof. All right, so if a person doesn't do any pre-planning, because you kind of just touched on it, and they don't have a will, break down exactly what happens then?
Well, it's unfortunate, because all of a sudden you're creating a lot more complexity and, unfortunately, more legal bills, because, as I said, your family's going to have to go to court, get appointed as an executor. And by the way, if you don't have a will, your family's executors, they don't then get to decide who gets what. You've basically lost your voice. You no longer get to dictate who gets what. Your family as executors do not get to dictate. It goes based on the law. So depending on which province you live in, there's different laws, and there's like a waterfall. Like, your estate has to go this way, part to your kids, part to your spouse, etc. So you no longer have a say.
Ooh.
Yeah.
Okay, I see what's happening here. But a lot of people would assume if you're married, doesn't your estate like automatically, let's say, go to your spouse?
Well, I'm sure your spouse would like that, but unfortunately, no. Again, if you don't have a will, that's where you decide who gets what. So if you don't have a will, you're going to have to go based on the law. Now, your spouse is part of your family, so they will be part of the family that receives it, but they're not guaranteed to get it all.
Wow, this is eye-opening. But okay, so here's a question. Is it possible to hand down investments or assets without your inheritors taking a tax hit?
Well, the good news is they don't have to worry about that. They're not paying taxes. The bad news is you are paying the tax, right? The tax happens to your estate on your death. So the taxes come off the top, and then the balance goes to your family members or whoever you designate on your will.
Oh, wow.
Yeah.
Okay, so I think a lot of people, whether you're alive or dead, you want to minimize the amount of taxes that you are paying out to the government. So what are the tools to minimize how much tax you pay, I guess, on those assets when you die?
Well, we talked about your spouses. There is a rule that says if you leave everything in your will to your spouse, then you don't have to actually pay tax. That deemed sale we talked about, that income, we can defer it until the death of your spouse. So that's a huge tip. Secondly, if you own assets jointly, like your house or investment accounts, your bank accounts with both of you, then you can avoid another tax called a probate tax. The other good thing is your home. Our home is our safe space, right? Well, I guess the government agrees, and they've said that if you own your home and you live in your home at the time of your death, then you don't have to actually pay tax on your house, because there's a thing called the principal residence exemption. So everybody who owns a house and if they live it at the time of their death, there's no tax. You get to shelter the tax on that.
Okay.
And I guess lastly, if you happen to be carrying on a business and you have certain business entities, there's some planning you can do to try and minimize your tax bill on death. So something you want to do during your lifetime.
Okay.
Okay, so let's keep talking about houses. What if you want to give away your house, right?
So same thing. If you give away your house to your children in advance, you don't want to wait until you pass away. There's no tax. Like you are, yes, deemed to have sold it to the kids, but you can shelter the tax with this exemption. And even if you sell, like forget giving it away, you decide you want to sell it to, you want to move to a different home. Every time you sell your house, you'll be able to shelter the tax. Great, but don't forget, you only get one exemption for family. You don't get to double dip. So if you have like a house and a cottage, you can't save taxes on both of them. You have to pick one.
You have to, and could you do that when you're alive or you're dead?
While you're alive, you can do that as well.
You can do that as well. Okay. Okay. Yes. Another question. Oh, that's me.
Yeah.
So regarding businesses. Okay. So if you've got a business, what should people consider if they have a business that they would also like to hand down or pass down to, let's say, their adult kids? What are the tax implications of that?
Yeah. So same thing. When you die, if you haven't done anything, you have that deemed sale with respect to your business. So one thing to really talk about, and something you should be talking about in your lifetime, and the earlier the better, talk to your advisor. There are strategies you can do where you can introduce your children and your spouse into the business as owners and give them equity while you're alive. And there's a way to do that without triggering tax. You're not technically giving it to them, you're basically introducing it to them. So you still have value. So there's lots of strategies, but you really need to do that while you're alive.
Okay,
Right.
I'm curious about this next one because I read about this a couple months ago, about giving away your inheritance while you're still alive. What are your thoughts on that?
So if you give assets to your family members while you're alive, you want to be generous, obviously. But again, the government has a rule that you're deemed to have sold that asset at the market value. So if you were to sell, for example, stock in Apple, you've been sitting on these Apple shares forever, and obviously they've grown in value. What happens is you're going to have a tax because you've given it away, but you're treated as giving it at the current value, even though you bought it at a really low amount. But if you were to give away, say, a car, like you drive a car off the lot, it goes down in value by a lot right away, right? So an asset like a car or anything else that has gone down in value and it's worth less than what you bought it for, there's no tax.
There's no tax. But there's a lot of parents giving money to their kids to get that first down payment.
Yeah.
Right?
Yeah.
The jackpot generation, right?
Yes.
That's getting money from boomer parents. Is that taxable money?
So cash is not taxable, right? We don't have this thing called gift tax in Canada. So you can gift cash. It's not going to trigger tax in your hands. It won't trigger tax in their hands. But you still have to be a little bit careful because depending on how old your children are, if they're over the age of 18, no problem. But if you're giving cash to young kids, it can trigger some tax implications down the road.
Okay, don't give to children.
No.
Let's just not give to the children. No. Okay, so what's finally something that you think more people should consider before, they're thinking of handing down wealth to the next generation?
I am a big fan of family trusts. And I know when people hear trust, they think like, well, do I have to be like part of the Roy family on the Succession show or be a billionaire? Not at all. Family trusts are a really common vehicle. They're great for anybody and everybody. It's a tool to be able to transfer an asset to a trust for the benefit of your children. It gives you time to still control those assets while it's in the trust. It's a great intergenerational tool. And I just think that it creates this ability to kind of also give to your kids, to your grandkids, and so on. But don't forget, trusts also come with a whole slew of tax rules, unfortunately, as every type of thing you try to do. So just get advice. Make sure you're talking to your tax advisor at the time and make sure that it's all done without triggering any taxes.
Yeah, we want to make money and protect our money and help the family all at the same time. Samantha, you made this so accessible for people like us, so thank you so much.
Oh, thanks for having me.
Thank you. Great tips.
Hey, you, come a bit closer. We've got so many more must-see interviews, spicy debates, lifestyle tips, and pop culture moments. So subscribe to our channel by tapping the logo below and don't miss out.